Good morning. Hope everybody had a great weekend. Let's see where we're headed here. Good morning. Good morning. Must be a way to clear up all these lines. Remove horizontal line. Remove from whatever. All right. Good morning. So Friday, the market's open higher. And you can see the big gap up. And I said at the time, this is a big gap historically. Historically, like the S&Ps, Qs, Dow, so on, a relatively large gap is about 1%. And this was, I believe, about 1.5 or so. And the Qs were like a 2% gap. And so the odds were that it wasn't going to go much higher that day. And besides, it's gapping into a big wide range red bar. So after a pretty much vertical collapse, and it dipped, right? It dipped, and now we got buyers beginning to step up here. And so the question is this a bottoming process, or does this set up, the next leg down to the next support level, which would be, down here somewhere? Because that's where the next support is. And so I drag that down here. So somewhere down in this area. And obviously we can't be 100% sure, but I would kind of prefer that as a washout. But our internals, they are already at extremes. I've seen them a bit more extreme than what they are now. But ultimately, we do have a signal to say, hey, you should have a bullish bias here, looking for price patterns. So we'd be looking for stocks showing relative strength during this decline. I forget which one it was, but Cindy had found one. She had mentioned, I should have written it down. That was pretty much unaffected. She's here. She'll let us know. But there are certain stocks out there, or the ones that gave it up last were showing relative strength. And, they may come back like the Verizon, ENDP. Thank you, Cindy. Writing it down now. ENDP. Okay. So the markets came back from an early morning dip or overnight dip, and you can see it's just trading inside here. We can go to the futures and look at them. And, I turned on the TV before and the markets came back from a triple digit drop. And look at CNBC, they're commentators. They're not whatever who knows what they know about a chart or a market. But anyway, so it came back from a dip. Okay, that's good when you're looking for a bottom. It's part of the bottoming process. But so far, it's just an inside day. So what we see is lower highs so far and higher lows. And the spring is being wound. So which way is it going to go, up or down? The internals do support. It could go up, but in any event, after a drop like this, historically, this is not going back up to the high. So one of the things that I spoke about on Friday, as far as prices pushing higher from here, would be, after a drop like this, shorting the first turn historically is poor odds, but a retest is very good odds, or even a slightly higher high is very good odds, looking for a next move down. And then we'll just assess at that point how things look across other markets. So we'll see. Let's get rid of that. And 2820-ish is where I had that marked, and 2820-ish is right about there. And there's really nothing to the left. Right? There's nothing there. Well, we got this here, but that's a more subjective reference point. And so looking inside the bars, there's some congestion there, but in reality, it really shouldn't make it up there, right? So this is the idea of, okay, there's some resistance over there to the left, which is around, as you can see, 2840, which I guess wouldn't be out of, the realm of what would be considered, on the edge of getting a little bit too far. But so if that's, using that reference point, getting the same setup. And let me back up a minute as I'm looking at this. If it was to get up to 2840, actually the depth of that retracement probably would be something that we could do the first turn, but with a big stop. Whereas if we were to get the M top, the retest, we could use a much tighter stop. And because, the first one, there's still a void. It's beginning to create some resistance. You're going to have to give it more wiggle room than if it was a retest pattern. Make sense? Because then we got a solid reference point there as an M pattern up in that area if it was happening. But right now, buyers are stepping up on the dip, and we can see, and this is exactly the pattern that I've been telling you about, where we get, well, in this case, it's a collapse, but we did talk about stocks in uptrends where the daily chart is moving down multiple bars in a row, lower highs and lower lows. You get a daily like that. I guess I should have drawn it like this, right? But you have an hourly that's going down like that, swing highs and swing lows. And then we look for this type of consolidation, which takes 2 to 3 days, right? Depending on the first day, whether it consolidated a bit versus, the collapse and there's like a big pop up. So 2 to 3 days, sometimes it's a little bit more, but we're looking for this on the hourly, and then that sets up, a high probability retracement to the upside, and then we'll just take it from there to see where it's going to go. All right. Qs, that was the big gap on Friday, and it's just hanging up there, up near the highs. It gapped down a little bit, and it's come back. So a bit less desirable pattern. And let's just go back and look at that to reinforce it, where we've got these bars next to each other, right? So clearly a better defined consolidation versus the Qs, which are kind of like a grinder to the upside there. Nonetheless, it could pop up a bit. And, well, here's our minor resistance, which is where it stopped Friday. And it's hanging there right now. And there's really nothing to the left. Well, we got this little congestion just up above there. Right? Point being, when you see a big wide range bar like that, it could be a void, meaning empty. So you got to look inside to see if there's any real resistance, even though, everybody looks over there and says, oh, what was, support should become resistance, yada, yada. But inside a big wide range bar, it just could be an empty void and really nothing there. And you want to be aware of that, is where you then look for the price pattern on a smaller time frame to confirm the creation of resistance. All right. Dow, more like the S&P, which it typically is. It's on that prior low, beginning to stabilize, which is suggesting, the potential for a bounce. We'll see how it shapes up today. Bonds just hanging out sideways. They had a little relief off the low there. And now that's beginning to go sideways, where, right, we can question whether it's setting up for the next drop to the downside. Right? So it's exactly what I was talking about, where we have a little bounce up and then some chopping around. It's not a pivot or an M top, but you can see what's beginning to happen on the hourly here. And because it's in a downtrend, it hasn't quite gotten up to resistance. I'm not so sure it's ready to roll over, but we're going to keep an eye on that. But this is the idea of how to combine multiple time frames. And bonds, oil, a little stabilization here, deep retracement. So I want to look at that on the weekly. And we've got the little pop up to a new high. Right? We've talked about the greater than 100% retracement concept. And that's where you look for a stall after a move like that. And we've got it. And so far, it's consolidating here. And it's a wait and see right now as to how much it's going to correct up at the prior high, because this opens up the door for a pretty significant move if oil can get through there. And last week, having that corrective action that it did, energy, which was attempting to clear those highs up there up into its void, just collapsed with the market having its drop. So that was a pretty nasty move to the downside in energy. Just a market getting shellacked like that. Buyers just stepped away. Of course, home builders with interest rates going up, and they led, because as interest rates started going up at the beginning of September, these started going down, and then they accelerated lower, and a lot of damage done there, as well as the construction ETF. Now gold, that base that was going on here that looked like it was going to roll lower again, popped up, and we've got a 1, 2, 3 type of continuation pattern, and it's already triggered on the futures. You can see where it's popped up here, and in the inside bar, and it's just backed off. So, which should set up the next buy setup over here. We'll be keeping an eye on that to see how that's going to shape up. So, long-term interest rates going up like this really should put a cap on gold. But, our president calling the Fed, out of control, and he had some other colorful words. I guess that made traders think, well, they're not going to raise interest rates, and the economy is growing, and that's going to lead to inflation. So buy gold. So I think that's the techno-fundamental thinking behind the move in gold here. We'll see how far it's going to go. And with that being said, the tremendous amount of damage done last week. If you're an ETF subscriber, you saw the trend matrix where, other than gold, which popped to the upside here, everything on the daily charts in a downtrend except for gold and interest rates. So a lot of damage, and they fell off the roof, so to speak, a bag of rocks, and we'll see what's going to happen. But the Russell just getting collapsed, and biotechs got hit, financials, even healthcare, which has been doing well, got pretty smashed, and internet stocks, they broke below that consolidation up at the top there, slammed through its 200. So keep your expectations in alignment here. The market may bounce, but this isn't, the type of uptrend or uptrend at all anymore on the daily charts, and some even weekly time frames broke. So a lot of damage having been done, and we'll just see what is going to show some relative strength. And we wait for I personally like to see things settle down a little bit after big range expansions like that to start taking positions again. So that's it for me. Yeah, and Dan's mentioning Sears. Right, they're filing bankruptcy and starting to liquidate stuff. So I guess all those home appliances that I have my extended insurance on, you can throw them out the window.
Well, just an interesting question. I'm assuming it's Chapter 7, which is liquidation. Chapter 11 is reorg, but who wants to reorg that dinosaur?
Well, who knows?
Right.
Amazon bought Whole Foods. Maybe they start going into the brick and mortar type of business. And, in reality, that may be, if they did that, that may be kind of like one of the things that happens with a lot of companies as they expand out of their, what grew them. And it may actually hurt Amazon if they would, do something like that, start expanding. Whole Foods was the first. I guess that made a lot of sense, but, just conversation. I don't think they'd be interested in the dinosaur, as you put it.
Right. Right. And also, I read recently that malls, so back to your brick and mortar and back to Amazon killing the retailers all of last year and, into this year, of course. I read that they have like their highest vacancy rates right now. So, and, REITs have gotten killed also.
Yeah.
Anyway, and back to your bias. I mean, excellent weekend research and your summary right there. And that's why I just said I confirm my strategy is definitely not loading the boat with the weeklies damaged. Yeah, I would love to get a lower low washout, as you called it, retest, whatever the picture looks like at the time. We'll recognize it. But these environments where the chart does say at least a bounce with the internals being in alignment is just the picture perfect time to short our out of the money put spreads. But again, as we keep emphasizing, we need a compelling chart pattern. You just don't go all in. Mm-hmm. And I'm watching the pre-markets right here and the indexes, and they're starting to become a lot more questionable than they were here an hour ago. If this held right here, that's my 5-minute chart. Let me switch it back to the 15. Well, see, the 15 is still fine, but it has to get over this prior high. So this might be a fantastic 30-minute high day. And when I saw the gap downs today, I do what I do every day. I mark it off on the chart, and every one of them were still above this Friday afternoon breakout area. So I was happy to see the gap down because it didn't destroy this 15-minute pattern. But, it negated it, and now it's retracing. So that's still a good picture too. But we got to wait, as I just said, for it to take out that prior pivot. Oh, we don't have many open positions. We have IYT, a put spread for Friday only. MJ, we have a put spread that's gapping up. We'll come back and look at some others. Well, we actually got into Tilray on Friday, and I'm going to wait and see where the midpoint is after the quotes settle down a little bit and then tighten the stop on that. CGC, we're stalking as a new trade. I actually sold some naked 42 puts on Friday that expired this Friday. Our little Goro gold stock moving up with the strength in GLD. Walmart, we're watching. FL, a couple here we're watching. Yeah, we're very, very light here. Let's look at some more in the marijuana sector. Cron, gapping up 1050. That's a put spread candidate. GTBIF is a marijuana candidate. Here's an American company, but it's more diversified and there's no pattern there, so no interest at all. This one busted out Friday, so that's to all-time highs. That looks great. I'm watching that. Tagada, relative weakness. Tilray, we looked at. CCJ, I've been watching for a while based on the monthly. IGC, a marijuana beverage, no pattern yet. NBEV, I don't like the way it came down. And there's kind of, if you just look at these as football players, hey, somebody's typing in the messages and we don't read those. So if you can just change your addressee to all panelists and attendees so everybody can see the questions, that would be appreciated. But just look at these as football players. And if you were the running back right here, would you rather run through these people or through these people? See how easy support and resistance is? Just look at the congestion. There's more overhead than there is support. So that's why I don't like InBev. But look at these other ones. Yes, this is resistance, but this is a more advanced concept. Why? Consolidation through time, bullish weekly, breakdown failures, transfer of supply, and we're just selling it out of the money put. So this pattern is superior to InBev. This one's relative weakness because it's all the way back down to the 200, but it's a nice retest here, and you just don't expect a pig target is all. PYX. The premiums are on this gap breakout day. I tried to sell a put spread. I sent an alert out. I remember it. It was 40 cents. Then I didn't get filled, so I had to cancel it. But even for this Friday, there's juice at the 35s. Selden, I just saw your note there. No, Sodom. Let's see. I assume we should take weekly trades. Walmart. No, our trading rules, Sodom, are we'd never trade in the first 5 minutes. If it's a long, we wait for a 5-minute high. But we're obviously in the green trading room, right? I'm just telling you our general rules. And we then look at our intraday setups for refining our entry time with the market internals. So there's no need to rush into anything. FL. I mean, look, I can't tell where it's trading. There's no volume here. Look, there's prints up here, prints down here. So particularly on Mondays, waiting even 10 minutes is better than 5. MJ, we got to see what the credit is. And that's why I always say it's 2-step process. It triggers, and then I want a minimum. And I see CGC pulling in right now. So there's no rush at all. Sometimes there are, and I'm like, hey, it's just 5-minute high. It's time to get aggressive. That ain't today. Hey, Alex, that's a good point. Running back and full backs. Well, that's true. That we call that bar by bar analysis, Alex. Bar by bar. Schwab here had earnings. And it's a mess, right? Anyone? Is that a pattern that interests me? Hey, Greg, this from the it's not perfect, but this daily. If this were a little bit higher right here, this high, this is I forget the name in Nissan's technical analysis, but it's the opposite of a wedge. It's a horn.
A broadening formation.
Yeah, this the loudspeaker microphone the football player uses. So these highs are getting higher, megaphone, and then these are getting lower. So yeah, megaphone. Thanks. I don't watch football, so see, I couldn't even think of that name. So that's interesting. Instead of volatility, so I don't even know how to read that. You can't say volatility is about to expand even more, even though it did here to the downside. Anyway, it's gapping up. It's a broken support, daily, weekly. I have zero interest in Schwab. This one too, even though it's at a prior low. Bank of America, it's junk. Sale, uptrend. weekly, monthly, right? Greg was talking about multiple time frames. Yes, the daily's in a downtrend. I see that. But it's a climactic buy setup. It's a you know, doji, long-legged doji, and it's in an area of support above the 200. You see? So these three time frames are in alignment. This BBY was, I thought, gapping, but I thought it was gapping over $1. Oh, this NEO is one I got on my long list today. This is the Chinese electric company, new IPO. Remember, I was watching it for a couple days. Today might be the day, 30-minute high. This weekly is hard to see because this wonderful trade station just buries this first bar here into the header. But it's a bullish engulfing, higher low. And so these are in agreement now. I have daily, weekly, monthly, 15-minute, all in agreement. 30-minute high. EL, it's a little too extended for me, Alex. But they're all cracked. The weekly, the daily, weekly, monthly are all bearish. Yes, but now use your daily time frame to perfect your entry, which means what? It means short a sell setup. Preferably a retest sell setup because it's so extended. And you had a beautiful gap breakdown here. Look, there was your sell setup right there. If it didn't gap this much under that low, I would have put that in our advisory letter. That was perfect alignment also, daily, weekly, monthly. So good find, but I think, you know, you can get a better entry. McTree, yep, that's a bearish. I don't personally like the way it trades. It's too whippy for me. All right, let me continue here. We got a minute, less than a minute. ITA, aerospace, I just think we need to keep an eye on it today because there's a merger between HRS and, nope, not ABCD, and a triple L. So we'll keep an eye on it. Plan, I just read this in the journal that it was an IPO on Friday, up huge, and it's some cloud-based or whatever. ABCD, this one gapping up huge, 1442, but no pattern. Now look, this daily, weekly, monthly, we're also in alignment. You see that? All in alignment. So wow, I mean, this might be a buyout the way it's going sideways here. Here, HEAR. Tell me, hey, is that an alignment? Daily, weekly, monthly, yes or no? You got a 50-50 shot. The answer is yes. 30-minute high. I have a wide range bar. You don't like the monthly? Tell me why. Wow. I said in alignment. I'm not trading the monthly. I'm trading the weekly, and I'm going down to the daily for my entry, which is, I think at this point, Friday's high. The monthly is in alignment. It's a. All right, we can talk about it later. I don't want to get distracted. It's a buy setup in an uptrend above the 10. HPE. All right, well, we'll come back later. I don't want to get too sidetracked here. All right, HPE, just a counter trend rally. It's you know, cracked. Spiders. All right, the 15-minute is looks great. So let's give it like 10, 15 minutes. Hey, good morning, Gustavo. Look at my little Neo. Neo looks great. I just don't want to chase here 2 minutes after the market open, but that looks fantastic. I might give it a 30-minute. All right, CGC's perking back up. Let's see, we had a put spread in that, a new one for Friday. Tilray, let's see what the midpoint is to close now. Hey, 35 cents. So good. Now I can move the stop. We're at 30.